I'm going to show you many different ways you can trade. We will cover everything, one video to give you it all. We're going to be exploring how you take risk, how you identify trades, brokers and platforms. I'm going to show you how you place orders, how you do backtesting, lots leverage, how you master trading and investing as well, the process to master trading. There's two holy rules when we're trading. The first rule is, have a look, boom, now we're already up $2,600 in this first trade. Now we have another one, okay, go sideways and boom, it took us out at a profit and all of a sudden we have made $3,300. I could enter over here when it breaks out. I could also enter when I have a resistance level like this. You don't need money to get money. You need experience and you need to know how to do this, and then the money will come. Hi everyone, and welcome to this video. It's going to be a very comprehensive video regarding everything that you need to succeed with your trading and investing. So basically, we decided to make this video finally. You know, we have been discussing it back and forth. We had a lot of people asking for it because we want to create a video where from A to Z, you will learn everything you need to actually make money with trading. You can literally watch this video and then you're done. Now, well, you need to practice as well, which we're going to get to. My name is Dennis Saltstrom and I've been trading and investing since 2014. I've been turning 4,000 into over 1.5 million over the last, since 2016 really. The two first year we doesn't count because I had no clue what I was doing. And we have plenty of videos where I share my story, and now I'm leading the trading department. And also I'm in a fortunate position where I can both live from my trading and investing, but also I have the opportunity to teach thousands of people around the world, which I think is absolutely amazing. And that is, you know, what we do here. So with that being said, let us dive into it. So first things first, the reason we're creating this video is because there is a lot of videos on YouTube. A lot of it is rubbish. Of course, anyone can show a chart on YouTube and saying, yep, this is the best strategies in sliced bread. And you might not know, but when you get some experience, you will actually figure out that it's not that easy. It is quite simple, but we usually say it's not easy. So we need to figure out a way where, how is this process actually working? How does it actually work? And believe me when I said it's the best thing that I've done, just because it is the most leveraged thing you can do. It's no matter if I spend 20 minutes or 1 hour, I can multiply my money over time. So if you think about it, it will take the same amount of time for me to double 1,000 to 2,000 that it will take for me to double 1 million to 2 million. It's the same amount of time. Normally you exchange time for money, which is something we don't want to do, of course. So that's a little bit who I am and why we're doing this as well. We will cover everything, one video to give you it all. And this is you don't need to watch another video after this. You can, of course, and it's very common. We're going to go through the main mistakes people do as well. And the reason we're doing this, and I'm doing this now, is because we want to give back to some extent as well. We are an education company. We do teach people how to trade and invest. And if you think about it, the main reason we exist is not because we teach people the strategy. It's because we have support. We give them everything they need to succeed, and we coach them. It's a bit like you buy a gym membership. We all know how many people signs up to the gym and actually goes to the gym. And the difference, if you have a personal trainer, you go to group classes, you push yourself harder. Not for everyone, but for the majority. That's why we exist. We are the missing link. And who's going to look at your trades and say, listen, you need to think a little bit differently. You need to adjust this and that. It is tough to do yourself if you don't have the experience. And therefore, doing education is key, which is why we're creating this video. So basically, let's dive into the first stage here. And that is all about setting expectations. When you do your trading, I would absolutely suggest you spend 1 hour a day to really learn this. And if you can spend less, that's okay, but 1 hour a day is a great amount of time to spend. And you don't need to spend more. You just put a timer on. We have 24 hours a day. And before you say I don't have time, can we please agree it's not about if you have time or not? It's all about if you want to prioritize this. We all have the same amount of time. If other people can find the time to do this, so can you. You just need to prioritize it. That's what this is all about. So essentially here, what we need to figure out is that you need to be fully focused. You need to have a designated place when you do this, a designated time. Make sure you tell your family as well that you're doing this. Tell them, listen, I'm going to do this for the next couple of months. I'm going to hone in. I'm going to spend an hour a day. And if you do that, you can have dramatic changes. But I don't expect them to happen overnight. That is important for you to understand. The changes will happen slowly and gradually and not directly. The same thing as if you were going to the gym. It's not like you're going to see your visible abs after a week. It's going to take a little bit longer than that. So it's a little bit the same here. So I don't know when, but if you keep going, you will start seeing results. And the good news with trading is that it's so measurable. You will be able to find out and see exactly how you're doing on a scoreboard, which I'm going to show you as well. So let us start from the beginning here. You need to know what you want. So basically, trading is the best business. I mean, what does the banks pay you today? 1%, 2%, maybe 3%, maybe 4%. While the inflation is more than 10, 11%, and they're raising the interest rates, sometimes they're lowering them, but then all the costs of goods and services are going up rapidly. So we're working harder, but we're not getting as much out of it, if that makes sense. So you need to really want this. You need to want to learn this. Maybe not because you love the idea of trading, as you might love. If you do, that's amazing. But the main thing is you got to love to the outcome. That's what really going to keep you going. So the outcome is, of course, eventually, after you spend an hour a day, you will be able to live from your trading and investing. And before you say, well, Dennis, I don't have any money. There are ways you can make money with this. You can, of course, trade your own money. You're going to start on a demo account with fake money, but then you can trade with your own money. But then you can also do something called prop trading, which I'm going to mention a little bit later as well. I'm going to share with you some of the payouts that we're getting. Yes, so you can see that you don't need money to get money. You need experience, and you need to know how to do this, and then the money will come. And that's what this is all about. Right, and in the description in this video as well, you'll find loads of links to all sorts of places, to the community, to getting started with learning, to read more about prop trading, etc., as well. So make sure you check out the description in this video as well. So basically, you need to want this, and the way you do that is to find out what your why is. Why are you doing this? Is it because you're sick and tired of going to your job every day, barely making ends meet, or whatever it might be? Or are you sick and tired of not controlling your time and having choice in life? And imagine you can leave a legacy, which this could be all about for you as well. I don't know what this is for you, but you need to find out why, because it's going to get tough. And we have a definition here as well. And we have the definition of commitment. The definition of commitment for us is doing the thing you said you would do long after the feeling is gone. So you might be pumped, you might be excited after watching this video, but you need to do it even though you said, and even though you don't feel like it anymore. When you come home from work one day, you're going to feel, well, no, I don't feel like it, but you do it anyways. That's the definition of commitment. You go to the gym even though you don't feel like it. So hopefully that makes sense. Now, I want to show you something first, because most people think they need more money than they do. I need 10 million. Okay, but why? How do you know? So let's find out what you really need. So basically, we have something that we call the critical net worth. All right, so critical net worth. I'll make it a bit bigger. So if you don't know your critical net worth, you need to find out what that is. And we're going to give this a go now to hopefully this makes sense for you. Critical net worth. All right. So we need to find out how much money you need, because if you don't know what you need, how do you know where to go to? So basically, if you have a look at this, we are looking at something like this here. So let's imagine, how much money do you need a year? Let's say you need $60,000 a year, right? You need $60,000 a year in order, or pounds or euros or whatever it might be for you. And you then at the end of the day, you learn, maybe, right? And let's say you learn how to make 10% a year. So how much money do you need in order to live out of that? Well, that's 600,000. And you might go, well, Dennis, I have no clue how to make 600,000. That's fair. How about if you can learn how to make 20% a year? Well, then you need half of this, 300,000. Well, that looks more interesting. And the question might be, okay, but how, well, I don't have 300,000. Well, we have two choices. Choice number one is to get more of this or more of this. You need more money. Choice number two, you can cut your expenses. And number three, you can learn how to make even more. And the cool thing is, you can actually get access to hundreds of thousands through prop trading and other things we're going to discuss as well. But you need to figure this one out. So let's imagine you learn, because it's possible. Most traders that I know, they know how to make between 2 to 6% a month. Which means if you multiply that with 12, it is 24 to 72% a year, right? So if you can learn how to make 50, let's say you learn how to make 50% a year. Well, if you learn how to make 50% a year, you only need 120,000. You see, this number is going down, but it's all about you learning how to properly do this. So hopefully this makes sense. Play around with this. I think that's gonna really help you to see how much money you actually need. And some of you are gonna go, holy moly, I am almost there. Now listen, 50% is not easy to make. Don't aim for that first. Focus on the process is the best thing to do. So, and then you might be asking, okay, Dennis, I'm going to be a millionaire tomorrow. And that's the real problem today. Most people want to become a millionaire like today or tomorrow. And that's not how this works. You can't necessarily be a millionaire tomorrow. Well, I mean, with cryptos perhaps, but not really, right? It does take time. Everything that is worth doing does take time. So we need to figure out what you can do and need to do in order to make this really work. What we can do here is to find out how long it takes. So basically, we need to have realistic expectations. Most people think it's going to take them a week and then they're going to be millionaires from trading and investing. I know for a fact that is not true. So what you should do is you should count with 6 months for learning. All right, 6 months for learning how it works, the mechanics, practice, all of these things. We're going to keep filling this out a little bit later as well. And then, I don't know, but month 6 to 18, that would be practice. This will be practice. Well, let's actually say mastery. Month 6 to 18 should be about mastery. This should be about you really practicing and honing in. And there's a lot of do's and a lot of don'ts that we are going to go through as well. So month 6 is for learning. Month 6 to 18 or 7 to 18 perhaps is to build a track record. It's to make sure you figure out that this works. And then the rest is mindset. So here, what we need to learn is I'm going to make this a bit smaller. So in the first couple of months, you need to learn, for example, the strategy. You need to learn all the mechanics, right? So you need to learn about the broker. You need to learn about the analysis tool that we're going to use. So I'm going to do some proposals for you here. So analysis tool is TradingView.com. It's free to use. It's amazing. Strategy, we will cover this. So we need to figure this one out. So these are the do's. We need to find a broker. If you're using your own broker, it might be interactive brokers, which I'm going to show you. Depending where you are in the world, you can also Google or use ChatGPT to find out the best broker for you. And interactive brokers, and you can also use something like, for example, FTMO or Funded Next for prop trading. Might be others. Google and see what's best for you. Very important. We are not financial advisors. I'm just sharing what we're doing and also what's working for us. So what I'm showing here, that's working for us. I'm not saying it's going to work for you, but we have taught a lot of people how to do this. So I think we know a little bit at least about what we're doing here. So just learning everything, learning the language. This is a new language for you. So you need to learn what is a stop order, limit order, what is a breakout strategy, what is a pullback, all of those things we're going to go through one thing at a time. But we need to learn it, right? It's very important that we do learn it. We need to learn the language around it. So then this is key, right? in month 7 to 18, and we can also at this point start learning the mindset around trading. And there's a really good book I would think that you can read if you want to, and that is Trading in the Zone. It's on Spotify, YouTube. It is with Mark Douglas. It is kind of the only book you need. Really, you can read more, but it's the only book you need. It's about mindset. And we actually believe, interestingly enough, that strategy equals 20% of success. And you have the mindset that equals 90% of success. And why do I say that? Well, people make all the mistakes. We're going to go into those mistakes in a moment, so you will find out what I mean by that. So month 7 to 18, it's all about mastery. So what we need to do here is to focus on one strategy. At this point, you need to also backtest a lot. You need to practice on demo. You need to use a trading diary. And I'm sure if you join our community, we can give you one of ours, I'm sure. But so make sure you find the link in the description here. But otherwise, you can also Google trading diaries. We have some really good ones that we have created and our community has created as well. But you're more than happy to also just go to Google and download one of your own. So use a trading diary, super important, and that is the key. Most people don't even use that, and because you need to have data, you need to know your win ratio, you need to know all of these things that no one knows. And you might not know what this is, but we will go through all of that. For now, just try to soak this in, and we will break this down one piece at a time. I'm going to show you here the entire journey, and then we'll break it down piece by piece. So use a trading diary as well, because we need to practice data, and we have some don'ts here. At this point, all I need to do is to choose a strategy that makes sense to you. There's no need for you to, and this is what a lot of people do. They do something called strategy hopping. Don't do that. Do not strategy hop. What that means is that they jump from a strategy and then they test it for 5 trades and no, it's not working. When I say practice on demo, I mean practice. We are talking between 100 to 200 trades. You need to get a lot of runs on the board to see if this is working, and then you can adjust and adapt over time. And that's of course when a coach becomes very handy. But do not strategy hop. That is very important. Do not switch strategies all the time. Everyone does that, so don't do those mistakes. And another thing is act on emotions. Believe it or not, you need at this point create rules and a checklist. I'm going to give you some throughout the video, but also don't act on emotions. And that is the main thing. Like you're jumping in on FOMO, you're getting bored. This is the 80% I'm talking about. Most people don't make it because they don't have a strategy. Most people don't make it because they don't use the strategy. They act on emotions. They do things they shouldn't do. They risk too much. You need to also here really use good risk management. We're going to go through all of this, but I hope you see what I mean here. So I don't know how long this will take. Some of you, the fastest person I've seen to go live and make money with their trading is 3 months. From nothing, right? Because they put a lot of time and dedication to it. And then I see the sweet spot between 8 to 12 months. But can it take longer? Sure. But then you have it for the rest of your life. And I would like you, if you can, to put 1 hour a day aside / 5 hours a week. And you might say that, well, then this doesn't work. I can't do 1 hour a day. Well, it depends. How bad do you want this? How important is this for you? And not only that, if you can only do 20 minutes to start with, great, do 20 minutes. But I would do something, right? I would definitely try to get to a point when you do 1 hour a day. And before you say I don't have time, once again, you know what I think about don't have time. But one thing you can do is to look at your usage on your phone. Yes. And you can also see how much time you spend on TV or other activities. But Dennis, I have to rest. I know you have to rest, but maybe you can rest after you do half an hour of this. So this is like playing a video game, by the way, but you make a lot of money from it. which makes it so perfect. So hopefully that makes sense to you. So skip the excuses, let's make it happen, because that's what this is all about. So one thing that I've learned as well, I think Winston Churchill said this once, right? I think many more as well. But you overestimate what you can do in the shorter term, but you underestimate what you can do in the longer term. There you go, I got it right. So basically, to give you some context here, so my first 2 years, 2014 to 2016, just to make this really clear, I lost 70% of my account. Not lot. Lost 70% of my account. I was devastated. It was the worst time of one of the worst times in my life, you know. And then 2016 to 2017, if I had a drum roll, I would use it. I made 150 pounds. And then I had, or dollars, I had 4,000. So this was when I was learning, right? So I thought I was going to be a millionaire, but not really. But then 2017 to 2020, what is it now? 25 or so, 26. We can count 25. Then I actually made, I went from 4,000 to over 1.5 million. And this was, of course, across stocks, across trading, across investing, across cryptos, across prop trading, all of those things. And yes, I've added some money along the way, but the profits is well over 1 million. And you can see, the first 3 years, not great. I made a big loss, really. But you can see here, I definitely underestimated what I can do in the longer term. And now, now if I double this, it's going to go to 3 million. And when I double that, it's going to go to 6 million. So you see, it's getting sped up. It speeds up a lot. And that's what's so cool about this. So make sure you keep that in mind, that, you will very likely underestimate what you can do in the longer term. And that's why it's so important to trust the process, keep going with the process. And let's go to the next one. Be consistent. You can do this, and try to put the same time aside each week and each day, because that's going to make it easier. Like if you have a system where you go to the gym the same time every day, your life will get so much easier than if you do a little bit here, a little bit there, very sporadic. So each Sunday, this is what I do. Each Sunday, I plan my week. I set time aside and I plan my week. When will I do certain things? And that really helps. So make sure you try to do the same time each day, and make sure you get in 5 to maybe 7 hours a week, but 5 hours I think is a good amount. And try to do it every time. Save days during the week to really get a routine and habit going. That's going to make a change for you. Treat it like a business, a very small business, in the sense that you don't spend a lot of time on it, but it's so leveraged. This is the best thing I've done in my life to learn trading, and I have Marcus and Investment Master to thank for everything. I've done education, I've done mentorship, so they taught me really how to do this. Next up, we have a very, very good part here as well, which I think is very, very important, and that is all about accountability. We're soon going to jump into the strategy. We just need to make sure we get the foundation right. So if you're really serious about transforming your wealth and changing your wealth, you need to stay accountable. So you could do it yourself, but what I would do is to get help. Get help from family and maybe friends. Maybe tell them, listen, I'm going to do this, I'm going to do it for us. If it's your family, I need to carve an hour out to really do this. I'm going to practice on demo account first, but then I'm going to make it happen. I can make a lot of money on this, So the facts are that we usually do more for others than we do for ourselves, which means that if you commit to doing this, and your wife or husband or kids go, well, have you done this yet? Have you done it today? Oh no, I haven't. Oh, you have to do it now. They keep you accountable to do it. And if you said you would do it, it's easy to break a promise to yourself, but not necessarily to your wife or your husband or your friend. So, and even use social media if you have to, whatever it takes. So you want to have the right people around you to keep you accountable as well. And the best thing to do is, of course, to get your family and friends on board. Maybe even do it together. If you're two of you, it's going to be a lot better. Imagine the difference if From you go to the gym yourself and you exercise in the gym yourself to you going there with a friend. You are meeting your friend there on a regular basis. I mean, you can't compare it. It's going to be vastly different, of course, as well. And then what I would say, also get the right people around you in terms of the traders. So we have a thriving community where everyone wants to succeed and trade. Some are really good at it as well. So what I would suggest you do as well is you press the link below and join our community. You might as well do it, because then you will be surrounded by like-minded people, and that will be a great starting point. And I'm not talking about people that, just found trading. You want to surround yourself by people that are trading and getting into trade. Maybe they're a year ahead of you and they're making money from this. Those are the people you want to surround yourself with. So we're going to make sure you are able to do that as well. I'm sure in the description here as well, or just write to us and we'll make sure we'll get you hooked up. So now we are ready to get going and get started. So basically, I'm going to show you what you need to make money with trading and investing. There is literally so much to learn. You could spend a lifetime reading the thousands of books, learning the thousands of indicators without really getting any closer to making money with trading. So I remember it was my mentor, Marcus. He told me that his mentor once upon a time told him that, Marcus, you know so much more about trading than I do. And he said, oh yeah, that's amazing. But his mentor said there's one problem. And that is that I'm making a lot more money than you. So in trading, it's not about the person that knows the most. It is the person that knows enough to make money and focus on that until they become really profitable. So that's my intention that we're going to do over the next 1.5 hours or so. That I want to make sure that we get you into a position where you can make money. So we're going to keep it simple. I'm going to show you what you need to make money, but that's it. So hopefully that does make sense. So with that being said, I want to start from the very beginning. And we need to start understanding how it works with the markets. How do we read price? How do we understand what it is we're doing? So looking here, we can see that we currently have a scenario where we're having candlesticks. This might be completely new to you, which is perfectly fine, but essentially what this is a way for us to read the price. So what you can see here is we have candles, and we have those candles represents a low price, a high price, an open price, and a close price. And this, by the way, can be on the daily chart. These candles can be 1 equal 1 day, usually refers to as 1D. They can be 1H, which would be referred to as 1 hour. And you can guess it. If I press on the 1 hour chart, it's gonna show me 24 of these candles for every day. If I press on the daily chart, all those 24 will be baked into 1 day. So as an example, let us imagine we have it on the hourly chart. And let us imagine that the price opens at $10. And then 10 minutes later, it goes all the way down here to $9, or let's say $7. And then it goes all the way up here 20 minutes later to $13. And then it closes, maybe it closes around $11. If it's green, it means, if the candle is green, it means it closed higher than it opened. And then if it's red, it's just the other way around. So then you can imagine that it maybe opened at 11, went all the way up to 13, and went all the way down to 7. But then when it's time to close the candle after 1 hour, then it closes at 10 as an example. So in that way, you can now understand how price is documented and referred to when we're looking at the chart, which we're going to go to in a moment. And in the chart that we will look at, you will have a lot of these candles everywhere. I'm going to show you a few different ones as well. So the candles don't need to look exactly like this. The candles could look like this as an example. You could have a candle with a very big wick like this. These are called wicks, the black areas. And this candle could of course be green, right? So this could be a candle. This could be what it looked like. It could also look like this with no body. What does this mean? Well, this means now that the open price was here and the low is at the same price. Went all the way up to the high point and then closed over here. Since it's green, that means the candle is going up. If the next candle looks like this, then the open price is the same as the closing price. There's no body, no one's in charge. And then you have the low price and the high price as well. And together these will create a pattern over time, which we are going to explore as well. And when looking at the chart, what you will see is you will have the date down at the bottom, and you will have on this side, you will then have the price over time. So what you will be able to see is when you look in the middle, you will have all of these candlesticks that are going to show you price over time. So what you basically would need to do is a little bit learning how to use TradingView, which is the tool that we're using to really make money here with trading. So basically, if I go to TradingView, which is the charting software we're using, it's tradingview.com. When you're using tradingview.com, you will now see all of these candles. You will see the date here at the bottom, and on the right hand side you see the price. So by using this, you will now see the price over time, and that will create certain patterns. Now currently this might make 0 sense to you, but it will as we move on. Hidden within all of these candles are thousands and thousands of trading opportunities, and we're gonna explore all of them. Not all of them obviously, but there are many of them we are definitely gonna explore. So this is basically the starting point. You now know a little bit about the candles, so let's just close and hone in a bit on those. So currently we are on the daily chart. So you can see that up in the top left corner here, it says D, which means we're on the daily chart. And if I change this to 1H, which then is 1 hour, it means that every single candle we're looking at represents 1 hour instead. So I think that's very important to, well, just know. We are going to be focusing on trading a bit on the 1 hour chart. I think that's a great starting point. And when I scroll back, you can see that there's hundreds and thousands of these candles. And remember, if I look at the candles on the 1 hour chart, that means that for one day, there's going to be 24 candles. 24 times 1 hour is 24 hours. Now, if I look at this, this might say you nothing, but let's start from the beginning. So here you see, we have a candle. Let's look at this big green one over here. So you see that this candle, if I zoom in, looks a little bit different, but is the same as the one we looked at before. And now we spent a couple of moments on this, and maybe you can tell me, which direction is this going? Is this going up? Is it going down? Which direction is this going? Well, it's green, so it is going up. So you would have an open price down. I can zoom in a little bit more maybe. Let's have a look. So you can see here now that we have an open price down here at the bottom of that green area. We have an open price. And then we have a low point a little bit below. You can see a little bit of a wick here at the bottom. I'm not sure if you can see that. A little bit of a wick down there, right? That's the lowest point of that candle. Went all the way up here to the highest point, and at the end of the hour, the candle closed over here. So, and then you have the next candle, which is not as big, right? And this shows it opened at this price, and as you have probably imagined, you can see the time and date down here, and you can see the price over here. So when I hold my mouse at any point on the chart, it shows me the price over time. So we're currently looking at Bitcoin as well. So you can see here, it opened over here, went all the way up to this peak, and then closed over here. Now if it's red, it means it opened And usually you can see the next candle opens where the other one closes. That's very, very common. So it opened over here, went all the way up to as high as to this point, went all the way down to the low of this wick, and then it closed a little bit lower because it's red. The price then went down. So together, these candles forms a pattern that traders tries to find in order to make money over time. So basically what we are doing as an example, we're finding, and this is what trading is all about. Trading is all about finding that there's a higher probability of something happening than something else. We're gonna go into that in the strategy. It doesn't mean I'm right all the time, because that's clearly not the case. I'm not, and I don't need to be. I just need to win more than I lose, or not even that, but I need to win bigger than I lose. So there's a couple of things we need to look at. But like in everything, is the probability. If the probability is higher that I'm gonna win, I will win over time. And we're gonna talk about why this is a bit strange to understand when it comes to trading as well. So just to really make sure this becomes clear, when we're looking at the candlesticks, you can see here that if this is a candlestick, and if we're looking now at, for example, let's say we look at the 1 hour chart. Would you agree with me if I go down and look at the 30-minute chart? Would you agree with me that there will be, well, you can actually guess how many candles do we have in here? Well, one candle, and we would also have another candle, right? So in the 30-minute chart, we would have two candles to make 1 hour. And if I now instead, let's imagine we go over and we now look at the 4-hour chart, which means every candle represents 4 hours. Well, then there's going to be 4 1-hour candles. Does that make sense? So 4 1-hour candles will make up 4 1-hour candles will make up 1 4-hour candle. And would it make sense as well that if we look at the 4-hour candles, let us imagine that we're looking at the hourly chart and the candles looks like this. So you have one candle looks like that, you have another one looking like this, and then you have another one looking like this, and another one looking like this. And these are both red and green, like that. And there might be some wicks here as well. There might be a wick down there, and there's a small wick there, and then there's a wick going up there, and a wick going like this. So if these are the 1-hour chart, would you now agree with me if I take the 4-hour chart? The 4-hour chart would be something like this. So the body will encapsulate all the bodies, the high of this body here and the low of this body here. That would be the 4-hour candle. So it will look like this. We can actually draw it on top of the 1-hour candle, like that, right? And then you will have the wick going down all the way down there, and the wick going all the way here. So this would be the 4-hour candle we're looking at. And breaking this down to 1-hour candles, you will see it like this. Breaking it down to 30-minute candles, you will have twice as many candles in 4 hours. So hopefully that makes sense. So that's pretty cool with trading, that you can break it down like this, and you can literally trade any time frame. You can trade the 1-hour chart, you can trade the 4-hour chart, you can actually decide. And what we need to understand as well is that these candles that we now learn about, and you're more than happy as well, to pause, go to Google, look at the candlesticks, but more so spend time on TradingView to look at how they actually work. So obviously with trading, it's like everything else. If you spend an hour a day, it's going to be amazing how much you will learn. But you do need to spend some time really learning this and studying what's happening here. And basically now with the candles, they will create a pattern. In the market, there are 4 patterns really. You have an upward trending pattern, you have a downward trending pattern, where the markets are making lower highs and lower lows, and you have a ranging market going sideways like this, and then you have the 4th market, which is, it's still ranging, so it's really 3.5, but it's a bit more erratic, and it's not as easy to understand what's really happening, which would be known as a no trade zone, really. So we are now going to learn how we can actually trade this. So the candlesticks makes out of these patterns, and while we're at it, there's two things I want you to really understand. The first thing is I want you to think about the price as a house, because the reason it works this way is because what's driving the market up and down is short. It's the fundamentals and it's the value. But more so what's driving the price up and down is human speculation. And we think in patterns. So if I, for example, did something like this, I was clapping like this, and I told you, okay, get into the rhythm, right? You have found the pattern and you do the same thing. We get a pattern, we go up in the morning, usually the same time. We have a pattern of going to the gym. We have a pattern of eating 3 times a day. So we like routines. We like things happening over and over again. And even though not the exact same thing happens, the market rhymes very well. So if you imagine a house, this is the way it would work. So here's story or floor number 1. Here is number 2. So what usually happens is that when the price moves, it bounces in the ceiling and the floor, which is going to act as a level of support and resistance. Support and resistance, that's the technical words for where the price is likely to bounce from. And you see what I said there? Likely. It's not going to happen, but it's likely. And that's all we need. We need the probabilities on our side. So looking at this here, you can see that eventually it might break and go up the stairs, much like you would do in the house. And now the old resistance or ceiling now becomes the floor. So you can make a note, if it helps, that the support that equals the floor. And that's where the price is resistant of going below, right? That's the floor. And then also we have the resistance. Resistance, which equals the ceiling instead, right? And, don't mind my spelling. It might not be perfect, but fortunately, you don't need to be perfect at spelling for making this a success, which is great. And then there are scenarios where support turns into the resistance, and vice versa. So when the price now bounces up and down, you can remember for now that the support might turn to resistance. And then we also have the other scenario where if you see this, if I draw it like this, you see lower highs and lower lows. This means we are in a downtrend. And would you agree with me that the downtrend will keep going down until the market changes character? So when you have a scenario of lower highs and lower lows, this will keep being the case until we change character and we start trading higher highs and higher lows. This is called price action, and it's called as well market structure. And now we have gone from a downtrend to an uptrend. And this is one of the keys, except for support and resistance, this is one of the keys in trading that we find very useful and makes it easier for us to make money. And now we need to find out how we can make money for this as well. So here you have the different phases: downward trend, uptrend, and then the last trend is when we're not making higher highs and higher lows. We're making sideways price action instead. And you can't really tell if it's, you can tell it's going sideways. So now the trend is sideways. Also sideways, also known as a range. The market is ranging. And what you can do is now to start create trends. So here we have a downward trend, and we can connect the peaks. Here I can connect the upward trending support levels, and here we can connect the ranging price levels. So, pause, go back, watch this as many times as you need, but this is exactly the way it would work. So now what you have learned in a nutshell, you have learned that there's a support and resistance, and there's a ceiling and a floor, right? And then those are being turned into a downward trend, an uptrend, or a sideways moving market, or a ranging market. And we would love to trade all of these. The only market we would not want to trade is when the ranging market goes over to a very erratic market. We could say a choppy market, where the market makes fake breakouts and you don't really know what's going on here. It's just, I don't know. I can't really tell what the trend is doing. We want to stay away from this. This is not something we want to trade. And we're going to practice a bit how we can really find out how this works. So far, just to summarize what you learned, you have, well, we've set the context right, we set the expectations, and you know that you need to spend some time on this and practice, and this is not going to happen overnight. The big disclaimer here is that, we don't believe in getting rich quick, because there's no such thing. But what we do believe in is getting rich for certain over time. And that means you gotta practice at it. The same thing as going to the gym. If you expect to get abs in the gym after a week or a month, you're on a fool's errand. You need to know, and you do know, that if you keep doing the work, the results will also come. So now we've also gone through that you need someone to hold you accountable, to really make sure you do the work. And that could be someone in our amazing trading community. You can find your own. The links are below in the description. But more so, what you can do is you can also have your family, friends, maybe do this together with you, or that they can keep you accountable. So make sure you declare that you're doing this. We now started to understand the price action as well. We looked at candlesticks. We've learned that green means it's going up, red means it's going down, and there's 4 components of every candle. We have an open price, a closing price, a low, and we have a high. Lastly, we learned that these candlesticks are being turned into a pattern. So we now know that they go into an upward trend, a downward trend, and a ranging market. And this ranging market can also be choppy, and that part we want to avoid at all cost. So those are the components we've gone through so far. And now we're going to go into how can these candlesticks turn into something that is working together. We can call it confluence. That how can we make sure we stack as many layers of probability together in order to make a success out of this. So with that being said, let us now have a look at what happens in the chart. So basically, when we now look at the chart, you can see, we can see that we're looking at Bitcoin here. And yes, you need to spend some time learning how to navigate and learning how to use TradingView. So what I want you to do is to practice, you can pause the video after you listen to this, and you can practice just dragging back and forth. Learn how to move up, move down. Down at the bottom here, when you hold your mouse there, there's going to appear 5 buttons. The plus button, zooming in, minus, zooming out, going right, going left, and then you can even reset the chart by pressing the reset button, which happens when you do something, it's going to appear. So you reset the chart to 1 hour, or depending on the time frame you're looking at. So practice moving around. If you have a mouse or a trackpad, which all computers do have, you can zoom in, you can zoom out. You can also use the price on the right hand side to pull this out and in, to use that as a zooming tool. Or you can also use the date down at the bottom to zoom out and in as well. So we can use all of these different tools to ensure we get the most out of the chart, but we do need to practice how to use it. So once you learn how the technology works, it will become so much easier. But just remember, you don't need to learn this right now. Take some time, maybe spend the first week just practicing on how to use the chart. And on the left hand side on TradingView, just to show you a bit how TradingView works, you have a menu. And this menu, you will be able to, at the top here, you will be able to get the navigation tools. So the one you want to be choosing is the one that is known as the cross here, because that's going to show you very precise where to find the price over time. And yes, there's hundreds of videos on how to use TradingView on YouTube as well if you want to dig deeper into it. But this should be enough as long as you practice. The one below that will give you a lot of trend lines. So if you go to this place, you can go to the horizontal line, and now we can even start building our house. Have a look at this. Now you see a scenario where previous resistance levels, you can see here, this is the resistance. The wick is going all the way up. You can see that the wick is going up to the resistance. That's now a ceiling, becomes a ceiling again, and now it becomes the floor. You can see that if I zoom in a bit, you see that the wick has now turned from, you've seen that the market has now turned from going at a resistance to a support. So now it's moving up the stairs. So you can see we can draw these kind of lines and try to play around with those. Up here as well, you not only have that, you also have the trend lines. Those are the main two we're going to be using. The trend lines, when you press once, you're going to create that anchor, and then you can pull it to wherever you want. And you can then press again where you want to let it down. And if you press on it, you're going to see these footballs. And now you can see you can connect the low points even in an upward trend. So now we see that the market is actually making higher highs and higher lows. And that is something that we can be trading, of course, as well. So that will be a scenario where we have an upward trend, right? This is now an upward trend, looks very similar to what we drew out. And this is now the way we're practicing. And so that's the tools over there. So those are the main tools we're going to be using over here. You can be using other tools. There's something called Fibonacci retracement that I use for some of our strategies. But I'm going to show you the easiest ways that you can start making money with trading. And then, of course, we have a lot more training. Make sure you reach out to us. I'm sure there's some links in the descriptions as well where we can show you how to do this. And then as well, we can see that we have this tool down here, and these two are very, very important, the long tool and the short tool. I'm going to show you how those works. So, but we're not going to do that just yet, but I'm going to show it later. So make a note that these two are important, because that's going to show us how we can do with how we can deal and work with our trading opportunities. Then we have this tool below, and the main one we're going to be using here is the brush, and the brush and also the rectangle. So you can even mark them. You see that there's a favorite sign here. You can actually mark them, and then it will turn into a box like this where you have all of the tools that you're using on a regular basis. But if I press on the pencil, I can now start making circles and I can draw whatever I like. And if you don't like what you've, what is this happening now? Okay, we go. So if you don't like what you've done here, you can press on it and just press backspace, and it's going to delete it for you. If you make your chart very cluttered and you want to remove everything at once, you press the trash can at the left hand side here and remove drawing, and it's going to remove all the drawings for you as well. And the other one you can use is within the same box. It's called a rectangle, and the rectangle you can now use to draw out boxes, because normally the support levels, the ceilings or the floors, those are actually created into a more an area more than a line. So I like to draw out boxes. So that's something that you could be doing as well. And I like to do this. You see that there's a little thing here where there's a pen and a lock. I like to press on that because that makes me stay inside the drawing mode, which I think is brilliant. And then you have text down here as well. You can actually, in the next one, you have text. So you can actually write like support if you want to make it clearer for you. And if I continue down, you have a whole thing with emojis. I'm not sure how to use that yet. I don't know if you want to put this grizzly bear or, I mean, the crying emoji somewhere. I'm not sure what those are for, you know. And then if you go down a bit more, there's a ruler where you can measure how much something has gone up or gone down, which might help you as well. I'm not sure, not for trading really. I'm not really using it for investing, yes, but not for trading. And then the other ones down here, you don't really need to use those. I think this is completely fine. So you can also now, if you want to post a video and play around with that, you're more than happy to do that as well. A little bit later in the video, I'm also going to show you, but at the top here, you can see here, you can search for a different symbol. Maybe if you press on it, you want to search for the US 100. This is the NASDAQ, which you could be trading as well. You could also be trading stocks. If I search for Tesla, you can now be trading stocks as well. So you could be doing that also. So you can change to any asset that you like. We're going to be sticking with Bitcoin for now. And I can now change the time frame. So now if I press on weekly, and there's even a small drop down menu here, so you can see all the different time frames. Now if I press on the weekly, every candle represents 1 week. Daily, every candle represents 1 day. Hourly, every candle represents 1 hour. We're going to start with 1 hour, but then we're going to go into the daily chart as well on stocks. So I'm going to show you what time frame I trade with what. So basically, this is now the way it works, right? And at the top here, you have a few more things to look at. The next thing is where it says indicators. We're not going to go through those just yet, but there's basically indicators that are helping you to navigate the market as well. And there are some other things we will go through a little bit later. But for now, that's the main things we're going to use for when drawing. So one thing I would do for you is to pause the video now. And I would practice using TradingView a little bit. When you feel comfortable with that, you can then let me know and you can come back as well. And just to mention this as well, maybe before you pause, you can now practice drawing out. If you zoom out a little bit, I can now practice drawing resistance levels. I can draw support levels. And I think this could be quite interesting. In order for me to draw a support level, I would need at least 2 bounces. I cannot draw it with 1. Resistance equals at least 2 bounces. So if you have an upward trend, a downward trend, you can see here, we need at least 2 bounces to become a downward trend. And these 2 bounces needs to make a lower low. And the same here, you have lower highs, and here we have lower lows. So as long as it's making that, then we are in a downward trend in the shorter term. That's all we're looking at here. And then you can see, well, within that, we have a scenario where we have higher highs and higher lows. So yes, you can have in a bigger downward trend, you can have a shorter term upward trend as well, which of course is a bit confusing. So we're going to go into how we can actually trade this and how this will work. So now the next step would be that we now scroll back a little bit. So you can see here, if I now scroll back, we can now be practicing. And we currently are in such a great position in the world where when you want to learn trading, it is actually, I wouldn't say easy, but it's quite simple because you have all the tools at your fingertips. So, I mean, 20 years ago or 30 years ago, you couldn't really find TradingView as it is today. You couldn't test your strategies in the same way as you can be doing today. But now we have such a great opportunity to practice the strategy, which I of course think is absolutely amazing. And I'm sure you will as well after you finish watching this video here where we go through everything. So what we're going to be doing now is to test this a little bit. So what we can see is if I scroll back, I want you to now go back and see if you can find some upward trends, some downward trends. So here I can draw a trend line like this, and you can see I'm attaching 1, 2, and 3 bounces. So this here would be a support level. I can now also draw a resistance level, something like that maybe, and it's not going to be perfect. You will see that there's candles outside of it, but here you can see that we have a rough idea now where we have a 1, 2, 3, 4, 5 points of resistance, and we can now use this to learn to trade. And if I scroll back a little bit, you will be able to see here we have a downward trend where the market is trending down, like something like this maybe. The market is now trending down, lower highs and lower lows. And what's really interesting with trading is you will normally see that the price, when it creates support levels, which is of course quite interesting as well, it usually creates resistance levels around previous levels of resistance, or it creates support at previous levels of support. So over here you can see that now we have a scenario where the previous level of resistance is now turned to support. The ceiling has become a floor. And the same goes for down here. You can see that if the price has bounced around this level before, high probability it's going to bounce there again. And the same down here, we had a little bit more of a horizontal move where the market just bounced up and down. And this will be a little bit choppy because the support levels goes lower each time, while the resistance are a little bit all over the place. So we kind of want to avoid that. I'm going to show you how to find really good trades as well. But now is a great time to pause the video, practice drawing out support, resistance, upward trending support, and upward trending resistance as well. And then when you're done with that, you feel that you're getting the hang of it, then come back and we're then gonna talk about how we can turn this into a strategy as well and how you can practice this. All right, very good. So now I hope that you have practiced this. Otherwise, do it later, but you make sure you do it, because otherwise it will be a little bit difficult for you to keep up, I think. So have a look at this. This is quite good. So let us go into this one here, because we have a bit more history here. So here we go. Okay. So have a look at this now. So if I now go back, and we're going to be testing this a little bit now, and I'm going to show you a few different ways where you can use this as a strategy. And I'm then going to go through the components on how to do this in an easy way. But before that, well, no, actually we can do that first. Have a look at this. So would you agree with me if we go into this period in time? So we had a scenario here where the price went down. We made lower highs and lower lows. Does that make sense? And down here we now started to create higher highs and higher lows. So now we've seen a market switch. And now what you want to do is to trade with the trend. So make a note that the trend is your friend until it bends at the end. So now what we want to see is to find out a pattern. And there's a lot of different patterns out there. So the patterns I want to look for is to follow the trend if we have higher highs and higher lows. And then we see a period where the market consolidates. A consolidation means that it's just moving sideways. You can say that it's ranging. Could be looking like that. Could also be a triangle, something like that. It doesn't really matter. The most important thing is that the trend is very likely to continue. And what we can do is now to place trades if it breaks out. Because the probability is that when the price is breaking out, it's then going to continue the trend. And remember, all that we are trading is the probabilities. So these here are called flag patterns. When you have a pattern that looks like this, it could look like a golf flag, could also look that it's rectangle, like a real flag with a flagpole. It could also be that it looks like this, that the flag is trending up like that. It could look in any way. It's just important that it's ranging and the trend is likely to continue. It could also be a downward trend where you have a flag, right? So now you have a flag that moves sideways. The flag might be looking like that, might be looking like this even, where the price does something like that. And then eventually it carries on going down. But remember, we want to be looking at lower highs and lower lows. Or you might have a pattern that looks like this. This is called an ascending triangle, where you have higher highs and higher lows, and then the market breaks to the upside. So when we are trading, there's two sorts of patterns we're looking at. Listen, I could spend all day showing you the different things to look at, but I want to show you something very simple you can do. So the first thing you're looking at is when price comes down to a support level again and creates one of these triangles. So it creates a higher high and higher low, and then we're looking for it to break out, because if the price is bouncing from a level of support, the probability is that then it's going to go up to the resistance again. Or the second alternative we're looking for when we're looking at price action and chart patterns is that we're getting a scenario like this. The price is up at the resistance and then it's breaking out. So then we're looking for a continuation pattern where the trend is breaking out. So you can see here you have two different patterns. You have a pattern that is a continuation, and you have a pattern that is a reversal. So how can you tell the difference? Well, the difference is when the market goes from lower highs and lower lows and is reversing into higher highs and higher lows, or reverses from higher highs and higher lows to then go into lower highs and lower lows. That is known as a reversal setup. Then the candles are then also turning into a continuation setup where the trend is continuing, where it keeps making higher highs and higher lows. And we need to learn how to adapt the strategy accordingly. So that is quite important for us to do. So let's have a look here. Where did it go? Okay, here we go. So I think I messed up a little bit there, but that's not a problem. We are going to find out where it is that we were. Okay, let's have a look. Let me zoom out. Okay, now we're talking. There we go. So those are the two different patterns we're looking at, and we're now going to put this to the test. So basically, if I now look at the chart, and it will take some time to train the eye, would you see here that we have a scenario of lower highs and lower lows, and now we're creating higher highs and higher lows. So the transition where we're going from a lower lows to lower highs to higher highs and higher lows, that's the transition we can be looking at trading. So here you have a scenario where we have an ascending triangle. Have a look at this. And how do I know? How do I draw this out? So an ascending triangle consists of at least one resistance level and two support levels. That is what it really consists out of. And what we're looking to do is to trade with the probability. And how do we do that? Well, we are looking now to trade this if we break the last level of resistance, if we break the resistance level or the ceiling. And yes, I measure this from the wick, the highest point of the candle. That's where we measure it from. I can then go into the trade. Now we're using this green and red box. So I went over here on the left hand side and I pressed the one that says long position. Long means that we're making money going up. Short means we're making money going down. And yes, I understand this could be a little bit overwhelming in the beginning, but it's gonna maybe be easier the more you practice this. Don't give up already. Keep going here. We're gonna be practicing this a lot. And have a look at this. So now we can see that we're gonna go into the order types in a moment and how all of that means and how all of it works. But I'm just gonna show you how this works. So now I would aim for this to go up a lot more than I would risk. But we'll go into this in a moment. But can you see here that now we've seen that we're going from lower highs and lower lows into higher highs and higher lows. And that's the probability we're trading. And the thesis we're having is that it's keep gonna making higher highs and higher lows until it doesn't. And you can see here, higher highs and higher lows all the way up, and that's what we're going to be keep trading. So you can see here we're going to be practicing this a little bit now. So you can see here the market is now making higher highs and higher lows, right, all the way up, and you can just keep trading this moving up. This would be a continuation trading. So you see here higher highs, higher lows all the way up until, well, it's going to keep going higher highs and higher lows, and we're just going to keep trading this until the market turns around. So when we now get a high and we now start to get lower highs and lower lows, we can now flip this and trade the market going down instead, until it then creates the opposite, which then would be higher highs and higher lows, and then we flip it around. So we keep doing that. We keep just trading this up and down, up and down, up and down, and this is how we would do it over time. And then yes, you will have moments where the chart also goes sideways, and in a ranging market, you can see here, previous levels of resistance are now turned into support. So here is also a great point to pause the video, because what you can do is now to pause it, try to map out lower highs and lower lows on the chart, and you can also do support and resistance. And if you need an asset to start working with, you can start working on Bitcoin as well. So this is a little bit how I would start. I would start to getting to know the technology. So we've now looked at candlesticks. We learned the high and the low of those candles and how those are broken up into time frames. We've also now learned that the market has three market movements, but there is a version of the fourth there, which is a shopping market. We have an upward market, downward trending market. Another word for an upward trending market is a bullish market. You know where that comes from? And a downward trending market is a bearish market. That comes from the bears, you know, the bears, rawr, you know those? When they attack, they go up on the two legs, and then they attack down. So the bear market goes down. A bull attacks from below and attacks up. So the bull market goes up. Who would have known? And Marcus taught me that the ranging market is more like a buffalo, you know, roaming the open ranges. So it's more of a buffalo market. I'm not sure if that helps, but maybe. But nevertheless, it's a ranging market, means moving sideways. So we learned that as well. We've also looked a little bit at the chart patterns. So we want to be looking at triangles. We want to be looking at flags, and those are the two main things we're going to be looking at trading as well. And the thing is that the market literally has thousands of different strategies and movements, and we just need to find what makes sense for us. I'm going to show you all the different ways, not all, but many different ways you can trade. And this is something that is applied by many different traders. And one thing I want you to write down is the only thing that you need to make sure is that the probabilities are in your favor, which kind of means that you have to make sure that when you're trading, that there's a higher probability of your succeeding with the trade than not succeeding. That's the main thing that you want to make sure. So now looking at this here, you can now see that, and I'm going to show you kind of these different kind of strategies if you like as well. And this is the home play, right? That you would now draw the support and resistance. But let's have a look at the different ways we can trade this. So there's a couple of ways we can look at this. One way is we can draw an upward trend like this. And what I could do is I could now enter over here at the support level, or I can enter around this point. And we're going to go into the different order types and how it works, but just to show you where you can enter. I could also wait for the price to actually break out from the triangle, and I could enter over here when it breaks out. I could also enter when I have a resistance level like this. I could also enter over here when it's retesting the resistance, and I could make money going down, which we are going to explore as well. And you could also be entering, I mean, you could enter anywhere. You can see when you have a support level, you could also be entering when it's retesting that. So you could then wait for this to happen, and you can go in there as well. You could also go in when you have a big green candle at the support level. But the most common things to do when you are trading is that you could trade, and usually when price reaches some kind of support level. I'm going to keep it very simple for today. There's so much to learn, but this is just maybe a 2.5-3 hour video, but there's so much for you to learn in terms of you could keep it very simple. I know traders that make money with every single method I'm going to be showing you, but then there's traders that they trade smart money concepts with demand and supply zones. They trade fair value gaps, a lot of different things. You don't need to know what that is at the moment, but there's layers to this. And the key today is that you find one of the things that I'm telling you now that makes sense for you. And then I'm going to break it down to how we really create a solid strategy as well. Now, I did show you this here. There are indicators that you can be using. There's literally thousands of them. We are not going to be using them because you don't need them. That's important. You don't need these indicators. So to show you what makes the price move. So there's a few things that we look at. So price, we're looking at price, right? And we're looking at volume as well. And price and volume, that shows you two things. Price shows you where the market is going. Volume shows you the strength of the move. And most indicators are made out of price plus / or volume. So it just gives you an indication where the market will go, but you don't need that. You have everything you need in the chart. And I'm going to be showing you the easiest way to actually start with your trading. So you can be using a lot of indicators like the RSI, the MACD, and different ones as well. But like I said, you do not need to use them. So I'll show you maybe one or two of them so you can see, but we're not going to be using them in the trading. All right. So basically there's two ways that most people trade. Either they enter on a support level, or, and that could be downward trending, it can be upward trending, or it can be ranging. And remember, we need 2 bounces before a trend is created. Or you could, for example, also be entering on a breakout. So that would mean when we break out from a support and resistance. Those are the 2 main ways that you can trade. And let's have a look here. Let's remove those. So I think we are now ready to explore how we can trade, and we're going to be practicing this a little bit. Have a look at this now. And for this, I'm going to be using something very cool. So what I'm going to be using is, let me scroll back a little bit and we'll go back to where we were from the beginning, down here. So now you can be using something called a replay tool, which we're going to be using in a moment, because that's going to actually make us go back in time. But have a look at this. So basically, you can now be practicing drawing out support levels. You can draw out resistance levels. We can also find the trend where we have lower highs and lower lows, or higher highs and higher lows. So now we can see that we are in an upward trend. So what you could have done in this scenario is you could now have entered the market down at the support level, maybe on the breakout over here. You could then have waited, and then you have another breakout. You could have entered over here. You could also have entered on the support level where we have at least 2 bounces over here. You could also have entered when we broke above here. You could have also entered down here, and you could then have made money going up here. So then at each point where we have a consolidation, so basically here where we have a little move down and then a continuation higher, you could enter at all of these. These all create small flags or ascending triangles. So you can enter on all of these as the market now breaks higher. So that's one thing we could do. So practice looking at this. See what you think makes sense to you. Does it make more sense for you to do triangles? Does it make more sense to enter at support levels? So those are the things I need you to practice. So currently, I want you now as home play, I want you to draw out higher highs and higher lows. I want you to draw out support and resistance, and I want you to draw out the trends. Are we in an upward trend, downward trend, or what is going on here? So I would like you to do all of those things. Now, the next thing we want to explore, because now we are getting to the stage where we can actually start placing orders, and we can actually start looking at the trades. And there's 2 things we need to explore before we can place the trades. And the first thing you should start, I'm going to show you the process to master trading. And then we're going to explore now in the coming hour or so. We're going to be exploring a few things. We're going to be exploring order types. We're going to be exploring how you take risk. We're going to explore how you identify trades. We're going to explore how you do back testing. And of course, you want to stick around till the end, where we're going to explore how you master trading and investing as well. The process to master trading, which I think is awesome. We're also going to be discussing lots, leverage, and margin as well. At the end, I might give you a little bit of a challenge. Let's break this down. The process that you're going to go through now to master trading is, number one, we need to decide on a strategy. So do you trade, for example, breakouts? Okay, let's have a look. Do you trade breakouts, which is one thing that I love to do? Do you trade continuations? Do you trade reversals? So you need to have a clear picture of what that looks like. So therefore, we're going to be scrolling back and find good trades. And then after that, we're going to be demo trading, which means you're trading with fake money, which is a great way of starting this journey. And then we're going to be back testing as well. And then what we teach our students is you do this for 10 to 20 trades, and then you ask for feedback. Because you might be repeating the same mistake over and over. But the most important thing here is you keep doing this until you're live. But you might be repeating the same mistake. That's why it's so important to have a trading community. And there's a few things that are so important to know when it comes to trading, which I will show you in a moment, that's going to make it or break it for you. But one of those things are, we spoke about this before, do not switch strategy, and keep working on it for 100 to 200 trades and keep improving all the time. Keep improving. Don't change strategy, improve the strategy. Make sure you find better breakouts. Make sure you see when are the breakouts working and not working. When are trading from support levels working and not working. You need to become quite good at seeing those things. So first and foremost, we're going to decide on a strategy. That's where we are going to start. We're going to decide on the actual strategy. And for this purpose, I'm going to be doing breakouts because I think breakouts are awesome. They're easy to see, easy to find, and easy to do when you get the hang of it, of course. So basically, if we look at breakouts, I'm going to be looking at two things. And the first step, as you saw from before, is scrolling back and finding good trades. So the step number one is to just look at the chart like this. You can look at any chart. I would propose that you look at maybe Bitcoin. You can also look at US 30, which is the Dow Jones. That's the Dow Jones. You can choose any of these. And you could also look at, for example, gold, right? You can look at gold as well. So the reason in gold, the ticker for gold is XAU USD. The reason I want to look at these is because if you think about it, stocks, they're open 8 hours a day. But these, the indices, Bitcoin is open 24 hours a day. Dow Jones and gold are open 23 hours a day. So you will find more time being able to backtest and trade these as well. It'll be easier to find patterns as well. So those are a few assets that you can be looking at. But we're going to start with Bitcoin. So, but you can apply this strategy across stocks, cryptos, all of it. So have a look at this. You need to, number one, we need to identify where the trend is going. So number one, identify the trend. So how do we know? Well, if you have higher highs and higher lows, at least two. So if we have a scenario where we have a higher high and a higher low, then that would mean two higher highs and higher lows, then we have an upward trend. I'm trying to keep this simple so you can practice. Number two, when we found the trend, we then want to be finding after this, we want to find the pattern. And you want to be finding triangle, or you want to be finding a flag. So now you can see that when we see here, oh, then here's a little bit of a flag, right? So you can see, boom, a little bit of a triangle. You might even say that this was a triangle. So step number one that I want you to do is just to draw out as many triangles, as many flags as you can find. and then share it in our community if you want to, or and you can also Google chart patterns and you will see a lot of them there as well. But nevertheless, you can also go to our community, ask for support and help. We have numerous very good traders in there as well. And here you can see as well, we have another sort of consolidation, and you can see as well, previous level of resistance turned to support. We can keep going. Here we have another scenario when we're breaking the high, and this is a little bit of a bigger pattern, but the same there, higher highs and higher lows. And then we have another pattern. This is a bit trickier, right? Because this goes sideways for a very long time. So here it might make more sense to then trade down here at the support levels. You could do that, or we could just wait for the breakout. We don't need to trade them all, and we can enter when it breaks here. We can then enter again when it breaks this. We could enter again when it breaks this consolidation or sideways move. So I think you see that what I'm trying to do here, and then try to draw out. This is a little bit of a consolidation as well that we could enter. And what I'm doing, by the way, I'm picking the trend line. That's very useful. And when you're drawing it, I'm holding in shift. If you hold in shift, it's gonna draw a straight line for you. And remember, I'm keeping it in drawing mode, which means I can just keep drawing. So if you are in drawing mode, it's literally gonna keep drawing every time you left click. But as soon as I right click, it's gonna take me out of the drawing mode, and then I need to go and pick what I wanna draw afterwards again. Right, so this is now what you need to practice. Go back, scroll back, and then you see, I mean, if I look at this, I see, yes, this is working. It becomes a self-fulfilling prophecy, and it's all about training your eyes on seeing the right things. So you have to do that. So spend some time doing that. To learn the next step, what we need to do is to understand how the market works. And we need to understand order types, your risk profile, and how to do this in the best way possible. So that's what we're going to be doing next now. So I'm going to be showing you a few different things that I hope is going to make sure it clicks a little bit for you as well. So for that, I have taken a few pictures to help me. So number one, we are going to be exploring something that we need to know. And that is, first and foremost, we want to be exploring the order types. So when we look at the market, there's a couple of order types we need to be aware of. And when you place an order, you will be using a few different orders. And you have a few orders. One of them are sell orders, and that is a sell market. I'll kind of make this a bit bigger. You have a sell market order. You have a sell stop order. You have a sell limit order. So these here are all entry orders. So you use these to enter the market, and this is not the entire truth, because you can have a sell market order for both entering and exiting, but for this purpose and to keep it simple, I wanna just keep it in this way. And this is enter, and this might be a tricky one, making money going down. And this is also known as shorting the market. So that's one of the things we can do in order to make money. We can short the market, making money going down. And there's a very easy way to see this. You're either betting on the market that's going to go up, or you're betting that the market is going to go down. And the way to look at it is just that if you're betting that the market will go down, then that's all you're doing. And if you're right, you make money, and if you're wrong, you lose money. And you're just pressing the sell button instead of the buy button when you're getting into the trade. That's it. And then we have the other sorts of orders as well, which is a buy market. You have a buy stop, and you have a buy limit. We're going to keep it simple. There's a lot more orders, but we're going to keep it very simple, which I hope you're okay with. And this is make money going up. And I have this one here to keep one of them a little bit simple for you, but maybe that's a bit much at the moment. So let us imagine for a moment that the price is over here. So if you enter right now, you want to enter the market right now, then that's a market order. If you enter with a market buy, you then are hoping for the market to go up. If you're entering in a market sell, you're hoping for the market to go down. Then you have the stop order. So let us imagine you're looking at a breakout trade like this, boom. And then if you want to enter when it breaks, so if the price is over here, you want to enter at a higher price when it breaks, then you're using a stop order. So then you're getting a little bit of extra confirmation that it's moving in your direction. And then you might want to enter, let's say the market is moving like this, and you want to enter down here at the support level. Then you can do a limit order. So when you're buying, then you enter at a lower price. So the way I remember it is a limit order. When you're buying, you enter lower, okay? You enter lower when you're buying. With a limit order, lower. Market, you enter at market, but a stop order, you're entering higher. So you're entering to catch the momentum. So that's the only one you need to understand. And then when you're selling, it's just the opposite. If you want to make money going down, you enter with market. And if you want to enter on a downward trending breakout and you want to enter down here, you then use a stop order. But that would be a sell stop order instead, because you want the market to then keep going down. And as soon as it hits your order, you are then going to go into the trade. And then you have the limit order, which is, for example, let's imagine you want to enter up at this level of resistance. If the market goes up there, the market is down here, then you get in with a limit order because you enter at a different price, which is lower when you're buying, but it's a bit higher when you're selling. It is a bit much to keep your to understand, and for that I have this description for you. So what you can do now, if you want to, is when I make this bigger so you can read it, you can now pause the video, because it's going to help you with the buy and sell. Let me move my face out of the way. Let's see here. There you go. So here you can pause the video and take a picture of this so you can read it. But a buy limit, you order to buy at or below a specific price. The current price, the order is below. And then you have the other one, the sell limit. You wanna you're selling when the price is over here, because the sell limit is you order to sell at or above a specific price. So you're entering with a limit, you're entering at a better price. So and with the stop order, you're entering at a worse price. So with the buy, you're catching the momentum, which we want to do with the breakout strategy a lot of times. And so hopefully that makes sense. Now we have another type of order. So I want you to imagine we are now going to enter if we break the momentum. Which order am I using here? We want to enter up here. You guessed it, we're using a buy stop order. And in most brokers today, you can now add something that is called a stop loss. So what we want to do is, when we get into the trade, I then want to put a stop loss in place. And this would mean if we're wrong about our trade and it goes in the wrong direction, it will take us out automatically without us needing to do anything, which is quite cool, right? So we always want to be using a stop loss. Make sure you write that down. You always want to be using a stop loss when you are trading. Very important. So that's the order types that we want to be using. Now, we have another order as well, which is known as a take profit order, okay? And the take profit order, it does exactly what it says. It takes profit for us as well. So have a look at this. This is really cool. So if we now look at this, we are now going to circle over here, boom, to this here, where is this box, it's number 1, 2, 3, 4, 5 from the top, and it says long position. So you press on the long position if you're going up. So buying means you're going long. So I'm now going to put the entry, and this is the rules. I'm going to write down the rules as well for the strategy a bit later so you have them. But I'm going to enter a little bit above the level of resistance, the ceiling. And the stop loss is going to be a little bit below the last level of support. And I'm going to show you how to place this order. Now we're just doing this in theory. And then we're aiming for it to go up 3 times as much as, have a look at this, boom. So we can place this order now. So I just want to show you this so you can get the full picture. Then we break it down so it becomes logical for you. But have a look at this. Here, you're now going to do a buy stop order. And you can do this hours before you're actually getting into the trade. So you literally can spend 20-30 minutes a day, and that will be more than enough. When you learn how to do this, it's going to be a little bit more in the beginning. You put the stop loss down here, and then you put the take profit up here. So we are aiming for a 3-to-1, which means we want to make 3 times as much as we risk, which is really cool. And then what happens? So what happens is this. Boom. This is now hourly candles. The next hour, we go into the trade. And then the market goes a little bit sideways. Well, it actually goes straight up. So you see it went straight up to a 3% profit. So on this trade, you would have made 3 times more than you're risking, which is the key to really make it with trading. And then here, maybe, you're now seeing, okay, Dennis, so it's bounced from a level of resistance. It created a descending triangle, which is a downward trending triangle instead. And now we can go to the short position. So going in there, when it breaks below, stop loss a little bit above the last level of resistance. And yes, you would enter if it breaks the lows of the wicks, so the low point. Stop loss a little bit above the level of resistance. And then you would aim for making 3% as well. And remember, all we're doing now is we're betting that the market will go down instead of going up. That's all we're doing. So you can see here, now we would make 3% on this as well. This is a great way of testing the strategy. And you would have guessed it. Now we're doing a sell stop instead. And the stop loss will go up here. And then we would do the take profit down below. There we go. Take profit. Like that. So that's it, right? So look at this. You could have placed the trade over here, and looking at the date, it would be the 21st of March 2024. I'm just going back in time here, and you would have gotten into the trade around the 21st, yeah, pretty much the same day, right? Yeah, the same day or roughly a day later, you would have gotten into the trade. And then a day or two later, the 22nd, the 23rd-ish, you would then get out of it with a profit. So you spend half an hour to map out the trade, and then it's going to take profit for you automatically on the way down. And like I said, all you're doing is betting on the direction that it is going, which I hope makes sense as well. So that's what we're doing here. So these are the different order types that we're using, right? We're using a buy stop and a sell stop. Those are the main 2 we're using for this strategy. I'm going to show you as well how you can use a limit order, but we're going to be practicing this a little bit as well. So as an example, let us imagine that you would like to enter. You have identified that there is a level of support. Let's have a look here. Okay, so you have now identified that there is a nice level of support over here. So what you do is you draw out the support level and you say, well, I believe that if the price goes down here and you put the stop loss a little bit below, I would say the same thing, the last level of support, what is probable? If the price goes down here, then I would like to buy. So if you want to buy lower, you're using a limit order instead. So we looked at breakouts now, but now we can look at just entering on an upward trend. You're entering here on the upward trending support as an example. So let's have a look and see how this would play out. So you do a limit order, and at the same time as you place the limit order, you put a stop loss in place as well. And of course, you can also put a take profit in place. And this is going to happen automatically. And let's have a look at this. The price goes up. And if it goes down to your support level, you don't know if it will, but if it does, at any point, you see here, it did go down, boom, to your support level, most likely taking you in. The wick went down and then went up again, and then you're in profit. So then it takes you in lower, and then for it to move up. So that's something you can do as well, and then you can wait for the market to break out. So you can enter lower at a support level, or you can then enter on the breakout. Like, those are the main two options I think that are worth exploring, if that makes sense. So that's how it works. But then of course you're wondering, what is this thing? What are we looking at here? What is this big box you're using? Well, this big box is very, very important because this is known as your risk and your risk positions. You know how much money to enter with and all of those things as well. So we have to explore what that looks like and how it works. So basically, the way this works is in the following way. So when we trade, there is two holy rules. There's two holy rules when we're trading. The first rule has everything to do with this. So this is the risk-reward ratio. And the two golden rules I learned is to let your profits run. Because if you think about it, we can make a lot of money with it, right? Let your profits run and cut your losses short. Those are the two golden rules we need to adhere to. In order to do that, we want to be using a risk-reward ratio where we want to be making 3 times as much as we're risking. And this is the way to calculate it. So first and foremost, I want you to imagine that we are now going to be using a demo account with demo money. Let's say we're using it with $100,000. Now, I'm only going to risk, this is known as your account risk. I'm only going to be risking 1% of my account, of the money that I have. It doesn't matter if I use other money like margin or leverage, which we're going to explore later. So what I'm going to be doing here is just risking 1% of my account, which equals $1,000. So the risk we're doing, which you can see down here, is $1,000 or 1%. Can also be pounds or whatever we want, right? So that's the risk. I'm risking $1,000 on my portfolio. Now, I want to be making at least 3 times as much. So that means I want to be making $3,000. That's known as the risk-reward ratio, that I'm risking less than I make. Now, obviously, you can make 4%, 5, 6, 7, 8, 9, 10% of your account. Because if you think about it, if the risk equals 1% of your account, then the profit is surely, let's have a look. Okay, then the profit is surely 1, 2, 3%. But couldn't it also be 4, 5, 6, 7, 8, 9, right? It can be however much you want, but you have to cut your losses. And that's why we can make money with trading. So not only do we have the probabilities on our side that we are going to make money over time with trading, but we also have the probability that when we win a lot bigger. So we're going to play around with this. So I'm going to show you that even though your strategy sucks, you have a very nice opportunity to make money with trading. So I want you to imagine we placed 10 trades. And it is a little bit like flipping a coin, right? Well, the better you get, the better likelihood you will have of making money. But let's say you lose 7 trades out of 10, okay? You lose 7 trades out of 10. You suck at trading, right? However, all the losses equals 1%. So 7 times 1% equals minus 7%. Or if you use $100,000, that would mean minus $7,000. With me so far? Now, let's say it's not even fair, right? You will win more. I mean, you will win more because you have the probabilities that your strategy will do really well over time. Let's say you have 3 trades that wins, but those are winning 3%. Well, that's plus 9%, isn't it? Which means that we have made plus $9,000. So we have actually made $2,000. So how cool is this? That you can actually lose 7 out of 10 trades and still make money. That's pretty cool, right? So that's something that we can be doing here when we're trading. So you have this box. This box we looked at on TradingView just represents the 1% loss versus the 3% profit. Now, we now need to be able to calculate this. And the cool thing is the technology does all this for us, so we don't need to do much there. But have a look at this. So if we, for example, imagine that we have a chart. Let me see here, yes, if I can draw this out for you. Let's imagine we're having this chart right here. So I want you to imagine for a moment, now this is the exact box we're using. So imagine for a moment we have, and we can do 10,000, it doesn't matter. Let's say your account is worth $10,000. Well, then you're risking 1%, which equals $100 per trade. That's what you're risking. $100 in order for you to make a lot more. So you are now looking, if you're losing, you're risking $100 in order for you to then eventually make 100 plus 100 plus 100. And yes, if you have $1 million, you will risk $10,000 per trades, right? So I want you to, so there's two pieces to this. You need to also know how big is your quantity. So how many units should you be buying? And this is the way that's calculated. I want you to imagine you are buying apples, because you can, this is the price of Bitcoin, but you can do apples, it doesn't matter. Let's say it's $10. That's your entry price. That's where you're entering at. And your stop loss you have at $8. And then your take profit is at $17. It doesn't really matter. So let's have a look at this. Let's say you buy 1 unit. You buy 1 unit, one apple for $10 and sell for $8. How much money have you lost? That's right, we have lost, boo, $2. If you buy 1 apple. Now the question is, how many apples should you be buying to make sure you lose $100? Well, so the number of units you should be buying is 50 times minus 2 equals 100. So in this scenario, the volume or quantity you would put in is 50. Now let us imagine instead that the entry price is 10, but the stop loss is 9. So all of a sudden, you can see here that 1 apple for 10 and now you sell it for 9, which means that now we're looking at minus 1. So now the question is, how many apples should you buy in order to figure out how to lose $100? Well, if you buy 100 apples and all of your 100 apples drops $1, you would have lost $100. So this is the way we calculate it. So we're focusing on limiting our losses, but we also know on the flip side, if we're right, we're gonna make 3 times or more, because the upside is obviously unlimited. So how do you do this on TradingView? I mean, this is awesome. Have a look at this. Maybe you need to go back and look at this a couple of times. So the job for us is we need here, have a look at this. I'm going to just remove the drawings quickly. So let's imagine we do a breakout strategy and we are entering as the market is breaking above this region down up here. So the rules are you put the entry a little bit above the wick or the highest point of the consolidation. Consolidation is the sideways move here. You put the stop loss underneath the most recent low. And all your job is to draw out this box. That's all you gotta do, is to draw out this box. Now, you want to make sure 2 things. Number 1, do you see in the box that it says 3, risk reward ratio 3? Well, that means that the green box is 3 times as big as the red box. That's all you gotta do. And if this is a little bit lower, then you gotta draw this up to 3%, just as a start, right? This is a starting point. You can see here, boom. So 3. And then if I double click on this, I can now enter some data. So I can see, what is your account size? Oh, great. Okay, so my account size is 100,000. Perfect. And we're going to talk a little bit more about lot size perhaps later. Nothing we need to worry about now. And then you go into risk. How much are you risking of your portfolio? Well, that's 1%. Perfect. And then you press enter. Do you see in here now? It says quantity Q2Y 0.57. This, my friends, means that if I now do, let's imagine this here, let me just do this. So this means, by having these numbers, this means if I do a buy stop for 0.57 BTC, that's the units, that's the quantity, that's what this means, 0.57. This means that if I'm wrong in my analysis, I will then lose 1% of 100,000. So if it then goes from my entry to my stop loss, I will lose $1,000. If it on the other hand goes to my take profit, I will make $3,000. Yeah? So that's what we gotta be doing here. So now I'm in the trade when it goes up to my entry. Boom, in the trade, I'm in profit. And then you can see here, we're now up in profit. And, well, I don't know what's gonna happen, but we'll see. There you go, right? So now you would have made a 1% loss and you would have lost $1,000. But we are going to go into how do you also manage your trade, because obviously we were actually up, if I do take this down a bit, we were actually up $2,700 or 2.77 in the reward risk ratio. So would I really have turned that into a loss? Well, the answer is no. I would not have turned that into a loss. So therefore I would have moved my stop loss up. I'm going to show you how to do that. We're going to keep it simple for now. I would do this in stages, do it in stages. But this is a great way to test if the strategy is actually working. So that's great. So now we've looked at the different order types. We have looked at the different order types. We looked at as well how you calculate the risk, and we've looked at the holy grail of trading and investing, which is not a strategy, which is the risk management. So as you can see here, we want to make sure we have a 3-to-1 reward risk ratio. We've also looked at how do you calculate your order? How do you calculate the entry, stop loss, take profit? Where do you put them? I'm going to give you the rules a little bit later as well. And not only that, we've also showed you how it works with the apples, right? So if you buy here, sell here, how would you make sure you know how much to lose? But the technology does that for us. And now all we have left now in this video is a few things. I am going to show you how you backtest. I am going to show you about win rates. I'm going to show you about some brokers and platforms. I'm going to show you how you place orders. I'm also going to be showing you how to do what leverage and margin is. I'm going to give you a challenge. So we have a little bit of time left here, but I do really want to show you how this really works. And yes, I will maybe show you at least 1 or 2 indicators so you have them. You don't need them, but just so you have them, because when we look at the price and volume, indicators are created based on that anyway. So support and resistance or whatever it might be. So just a visual aid to some extent. So very good. So now we are going to go into the next piece of this, which is going to be all about us actually placing a few trades. You can practice that. But before that, make sure you now pause the video and you go into learning a little bit more about the various boxes, right? The long box, the short box. Try to draw out trades, and we're then going to go into some of the rules as well, so you can see how to really do this and how it can turn into a strategy. And then I'm going to show you a bit of really cool stuff as well, of course. So let's dive into the next part here. So we have a few elements left, as I said, right? And what we used to look at this is quite interesting, because we have now done, we have decided on a strategy, we have decided for the breakout strategy, and we have decided maybe for the continuations to do flags as an example, and maybe reversals as well. So now it's all about demo trading and backtesting, but first I just want to define a couple of rules for you before we actually backtest this. And these are going to be rules that I know are actually quite good. So you of course can create your own eventually, but these here will work because I know that there's a higher probability of these succeeding than not succeeding. So what we're going to be doing is this. We're going to look at the assets first and foremost. And basically this is just what I do. We're going to do some examples, but stocks I do on the 1-day chart. That means that all assets and all stocks, if I'm trading that, I do on the 1-day chart. So each candle represents 1 day, the daily chart. For other assets, such as, for example, if we have indices, we're looking at the Nasdaq, usually it's US Tech / US 100, or the US 30 is another one, which is the Dow Jones. And if we have gold, which is XAU USD, silver, XAG USD, usually these are the tickers, otherwise you can search for silver and gold depending on the broker. And even BTC, USD, etc. I do these on the 1 hour chart, and you can do the same if you want to do this on currencies, etc. I'm going to show you a couple of examples. And then what I'm going to look for is either so I'm going to look at the 1 hour chart, right? And I'm going to find, first and foremost, we're looking for the trend, as we just discussed before. Is it an uptrend, downtrend, or is it ranging? So we've been discussing that before and how that works, and after that decision, I think what we need to just figure out is if it's an uptrend, we can go long, making money going up. If it's a downtrend, we make money going down. And if it's ranging, we can do both. And then obviously, we want to be looking for two things. Number one, we can look for reversals, and reversals, they happen when the trend shifts. So the reversal will happen when we go from a short to a long. So that's when we are getting, for example, if we look at reversals, and we just do the long examples, we just flip this around if we go short, making money going down. So basically here, we will be looking at the following. So we will be looking at, for example, to look for higher highs and higher lows, plus a triangle, for example. And this could also be head and shoulders and other things. But we're going to keep it simple. We're going to look for triangles. Or it could be continuations. So if it's a long continuation, we do the same. We look for higher highs and higher lows, and plus triangle or flags. And we're going to go into some other metrics here, but we want to make sure as well that we place the entry. So the entry will be, and entry is a bit over last level of resistance. Resistance, right? And the stop loss, which we've been discussing, right? This is a bit below last support. And then we have the take profit, which is going to be at 3-to-1 in our risk reward ratio, so we can make 3 times more than we risk. And then when we talk about risk management, we're looking at 1% risk of our portfolio. So if you stick to these rules and you practice this over time, you should be quite successful. You know, I've made a lot of money with this, which I will show you in a moment as well. But then, of course, you need to practice, because you need to make sure you're doing the right breakouts. And for me, as an example, I've made sure, of course, I've done the right breakouts over time. It's easy to say, you know, do the right breakouts, but you need to practice this. And that's what I've done over all these years. And basically, that's where coaching comes in. So as you get better at this, you will realize as well that if you have a coach, like I have a personal trainer, it will make it easier, or at least have someone you're doing it with so you can learn along the way. And if I were you, I wouldn't change strategy. There's a mistake in trading called strategy hopping. You just you go to YouTube and you find something that seems to be the holy grail, but nothing is. We all have hit and miss, and I will go into that mindset, which we believe is 80% of your success, in a little moment, and talk about the psychology of trading as well. So we'll get to that in a moment. So that would be your risk reward ratio 3-to-1. We take profit there, and we have a risk of 1% of our portfolio, and then we either, and this is important, we either going to make 3% profit or minus 1%. And this is just in the beginning. As you get better, you can practice to move your stop loss up and play around with that. But for now, let's keep it simple. So now we have a strategy with the probability that we're going to succeed is larger than if we're going to lose, right? That's the first thing. The second thing we have is also the probability that when we are winning the trade, we actually make a lot more than when we're losing. So all of a sudden, we are stacking the odds in our favor, which of course is the entire power around trading. So just to show you two examples here, so before we do some actual trading. So have a look at this. Now we have the rules put together. So basically, if I go down here and we look at this example. So here you would have a very nice example. We are looking at the 1 hour chart. We're looking at Bitcoin. We have higher highs and higher lows. And we would now place the order a little bit over the last level of resistance, stop loss underneath the last level of support, and we would aim for a 3-to-1, and that's what we would place. And this for me would be a great trade, and obviously you can see that it turned out quite well. So basically, just so we can, and this is what I would do if I were you, I would find this, and then you can join our community, of course. And if you want to find out more how we can actually give you feedback and coach you on this, just let us know, write to us, we're here to support. But basically, I would then put 1 or 2 pictures like this. So before you then place the trade, when you do the analysis, well, all of a sudden, you are going to have a reference point, which is great that you can look at. So when you then do the trading, slowly but surely, you will start to learn, teach your brain that this is what you should be looking for, which I think is brilliant. This is what everyone should be doing, but most people don't. They go based on emotions and feelings, which we'll discuss in a moment. So when we now as well, when we talk about, so in order for us to place the trades, we actually need to have a broker. So, but the step before you actually place the trades could be that you do some back testing. So your job will now be, and this is quite cool, and this is something you can do, you can actually press the replay button at the top here. It says replay. You can press on this, and we're just going to go here. You can press on the replay button. And now down here, you can go to, and you need to have a paid version of TradingView for this, but with the free version, you can do it on the daily chart. But nevertheless, they have a 30-day challenge. And if I now press on random bar, it's going to take me to a point in time. This is 2018, and the price is $6,000 for a Bitcoin. And now, if I use the buttons down here, I can now fast forward. I can have, and each of these candles, by the way, is 1 hour. So I can now fast forward and trade is as if I was live, but I'm just scrolling backwards. This is back testing. You're testing your strategy back in time, which I think is a brilliant way of doing it. So now I pressed a little bit too quick. So as an example, what we could have done here is we could have seen on the hourly chart that we have a level of support. And remember, this is one of the ways that we can use to trade. It's bouncing at a level of support, and you would now place your trade like this. Boom. A little bit above the level of resistance up here. That's the entry. Stop loss a little bit below the last level of support, and you would now aim for a 3-to-1. And if you look closely, I'm going to remove my face. If you look closely, you now have buy and sell buttons down there. So let's see how that goes. So have a look at this. If I double click on this, I make sure I have the right account size. I risk 1% of my portfolio. I press OK. And in the middle here, you can see the quantity. It says 8. So that's the quantity we're going to be using. So I'm going to press 8 in here. And you can only do full numbers here. Boom, like that. And when you do the back testing on TradingView, unfortunately, you cannot do a stop order, because that's the order we would be using here, right? We would be using a buy stop order. So when we use a buy stop order, remember, it's gonna take us in as the price moves up and goes to our entry. We're entering a little bit higher, and then we'll make money as it goes higher as well. So basically, now when I press forward, and we know that we would we would be in the trade here, but if I press buy now, it's gonna buy for me all the way up here. So maybe you need to go back and then go, okay, but we should buy it down here, just because it's a little bit limited. So if I press buy, you can now see that there's a box on here where it says 0% or $0 in profit. So I would drag my stop loss down. If you hover a little bit here to the left, I can now drag my stop loss down to where the bottom of my box is. So you can see I would be losing $600 if it goes the wrong way. So I'm limiting my losses. Take profit, I drag all the way up here. So you see, on this trade, I'm only risking $600, but I'm looking to make over $3,300 if it goes in my favor. And have a look, boom! Now we're already up $2,600 in this first trade. And have a look at this, doink. Now we have another one. Okay, goes sideways and boom, it took us out at a profit, and all of a sudden we have made $3,300. So this is the way that you want to use to test your strategy. And then we'll keep going, and then maybe there's a flag now. We'll see what happens. So now it goes a little bit sideways. Okay, it goes down a bit. So now we have a scenario where we have higher highs and higher lows. So if we now break the resistance here, we would be very interested to go long, but not before, so we need to be a little bit patient here. Okay, all of a sudden it did, right? So we have to see here how to do this. So now there's a flag again. So now what we can do is we can now enter on this flag if it breaks, right? We have higher highs and higher lows. And what you want to do here is we now want to measure like that. So we now want to measure, if I go here, and we want to look at this, so it looks very similar to the picture we've drawn here, because we know that that's a high probability trade. And now if we go sideways, okay, so now you see the price went down instead. We were wrong here, but it never took us into the trade. So that's the power of doing a stop order, so you're sure that it's moving in our direction. So now since it's moved down instead, and when it crosses the level we would have our stop loss, I delete the order instead. So that's why we want to place the order for when it actually breaks instead. So of course this video could be 18,000 hours, but I don't have 18,000 hours for this. So make sure you pause the video and practice this as we did now. And in the beginning, just to make this very clear, in the beginning this will make 0 sense. You go back and watch this 5 or 10 times because it will become easier as you go. And just make sure you keep practicing an hour a day, as we spoke about, and it will become easier and easier, and you will get more experience and learn more. But if you just focus on learning triangles and flags, I can promise you that you will do really, really well over time. So now we're going to go into some of the final stages here, and these are going to be the most exciting because we're actually going to try to place a trade. So when we talk about the brokers, what I would do if I were you, and this is, I think, quite easy to do, right? But if you look at the brokers, there are a few that you can use. I use, for demo, which is with fake money, I actually use TradingView.com because you can use that as a demo broker with fake money. You can also, if you want to do prop trading, you can do MetaTrader 5. So that would be for prop trading. And I'm going to show you a little bit more with that. And for that, you can do some demo accounts with Funded Next or FTMO as an example. You can also use, if you want to trade your own money, then I think Interactive Brokers is really good. And you can YouTube how to use these. But the really cool thing with Interactive Brokers, it's really low fees. And this is a big and, right? What I think is really cool about this is that you can connect it to TradingView, and it's going to be very simple and easy for you to trade. So make a note of these, and you can Google and see which one of these that works the best for you. However, if we now go over to TradingView again, so what you want to do is to go down here to where it says, I'm just going to log out so you will get the right view. If I log out, you will see that down here it will say at the bottom, it's going to say trading panel for you. And when I drag this up, you will then see that it says paper trading, capital.com, interactive brokers, and you have 100 other brokers that you can connect to TradingView as well. So when I double click on Interactive Brokers, it will log me into Interactive Brokers, but it will work the exact same way as it would on paper trading. And I do want you to start on paper trading because what most people do, there is a rule that 90% loses 90% within 90 days because they have no clue what they're doing. They don't even bother learning a strategy with solid risk management where they risk only 1% of their account. But you're learning that. So for that reason, I would start with a demo account, and so you're not losing your money, all right? So let's go to paper trading. Let's press connect, and you have to create an account for this on TradingView, and it's free. And now we're connected, and you can see here I have $100,000. That's what you get to start with. And now if I scroll down, what you can see, if we go to Bitcoin now, and let's imagine we find a really good trade. So let's imagine you want to place this trade here. Boom, right? So now we're seeing this. We have a nice flag at the moment. So what you do is we would do a long order like that. Put this in. I would put the stop loss a bit below. And then I would aim for 3 to 1. And now the really cool thing with this is that you would now just click on this, right click, press create order. And now since we're entering a bit higher, this is the order box you're seeing here. So you're seeing here the order, if you're buying or selling, if you're gonna make money going down or make money going up. And then you also have the entry price, the units, how much we're buying, and it's entering that automatically since you've put all the right numbers in here, 100,000, 1% risk, it's gonna give you the right units there directly and automatically. You might need to change this, but do it and put it at risk percentage of balance. You wanna make sure that's 1%. And then you have the take profit and the stop loss. Now, you might be wondering, but Dennis, what are ticks? Don't worry about that. We'll focus on the things that's actually going to make you money. And this order form looks very similar to all the other brokers as well. So you go to the weekly and you just you put this on weekly. That means that the order will be active for a week, which is more than enough. And then what we do is down below, we're going to press here on buy. And you have the leverage. We're going to talk about what that is later. The trade value, how much money that is. The reward as well, how much money we are making. You can see here we're making 3,000. Risk 1%. We're risking 999. And you can see that here as well. That you can see, I'm not sure if you can see this, is the yellow numbers, minus 1,009. And if we win, it says plus 3,097. So that's a 3-to-1 reward risk ratio. And if I now press buy, doink, like this, send order, what's going to happen is, if I go down, let's remove this, and you can see now on the actual chart here, it actually, oh, sorry, let me do this again. I actually pressed the wrong order, so you need to know what you're doing here. Create limit order. Okay, so now all the numbers are correct, but one thing we forgot to do is to change the order type. Remember, we're doing a stop order here. We're entering higher. Otherwise, it's going to enter you automatically right now, and we don't want to do that. So let's try this again. Let's press buy, send order, and now you can see we have a stop order. So what's going to happen now? So if the price moves up to your order, it's going to take you in automatically. And then if it goes down to a stop loss afterwards, it takes you out automatically at a loss. If it goes up to your take profit, it's going to take you out automatically at a profit. So the beauty of this is that you don't need to do much. It's going to do it automatically for you, which I think is awesome. So that's the order. And now if I go down and drag this small box up down here, you can now see that I have 0 positions. And then I have the orders in here. So you can see I have a lot of orders in. And as soon as you're live with your position, you're gonna see it in here. So just to show you, if I would do this and I would do just a buy like that. Okay, let me get the order box out. Just to show you what happens. Do a market order, means I'm buying right now. Press buy, send order. What you can see now is my position is now active. Long means I'm buying. Quantity, how many I've bought. The fill price, which is where I bought. The take profit, the stop loss. The unrealized profit and loss. Now I'm minus 0. Oh, I'm plus $2. Yay! So you can see that live here as well. So this is how you would place an order. And if you just want to make money going down instead, you would just press sell up here instead of buy. And I know this is a lot of terms, it's a lot to take in, so you might need and want to watch this a few times to really make this sink in, of course. And that's perfectly fine if you're doing that, so make sure you do that as well. Now, there are a few more elements. Now we have, and this is really important, right? So now we have rules, and you have something to look for. We've done a little bit of demo trading. You can practice with interactive brokers. You can open an account with them when you want to go live. And it will look the exact same as I did now on TradingView. And there are videos on how you can use MetaTrader 5 if you want to do prop trading, which I'll talk a little bit more about in a moment. Now, there's a few more things I want to show you before we actually wrap up this video. The first one is this. When we talk about trading, there is something really interesting here. And let's look at my portfolio. So this is my result 2024, and this is something we share with our students, and so of course they can see as well. So what you can see here is that I actually made 67% last year. This is 2024, sorry. 122 trades, I won 70, put them lost 52. So I had a 57% win ratio. This means that if I place 10 trades, I will lose 4 out of those trades. And I know I will. It's part of trading. But over time, you can see, even though I have all the trades here, all the links, this is known as a trading diary. You'd need one of these to get your stats. Because I know, even though I have 4 losses out of 10, I know I will make money. This is the breakout strategy I've been using here. So if I scroll down, you will see that I have here 2 losses in a row. That's fine. It's 1% each. But down below, I won 3 trades in a row. 4, 5, 6, 7, 8, 9, 10% plus. So even though I do have a few losses, 1, 2, 3, 4, 5 losses in a row, that's fine. It's just 5%. While I made 2%, 2%, 2%, 1%. And look down here. Well, now this year, have a look at this. This year, we're up 21% already. And look at this, 6% profit. I'm currently in, and here's 3%. I'm currently in another trade. Let me show you. I'm in another trade here on Ethereum. And here, look how much I'm up. I am currently 10% in profit. I entered down here. I'm now 10% in profit as an example. So I can have 10 losses in a row to make up for this win. How insane is that? And this is something you all can do. But we do need a trading diary, which I will show you how to use as well. And make sure you write to us. We'll make sure we can get something over to you. Maybe you can also Google on how to use one. But of course, we have these that we use in the community. And you can see here, I know I have a 50% win ratio. So if I place 5 trades or 10 trades, I know I'm going to lose 5. And that's okay. We are not here to win all of our trades. You know what we're here for? We're here to make money over time. So I need you, this is a bit of mindset here. I need you to see trading and investing. I need you to see this as a business. What does that mean? Well, you have income and you have expenses. Both of those are part of your business. So if you have a look at this, if I look at this risk and reward cheat sheet, I know that if I, for example, this is all percentage, right? So let's say I have a 50%. I win 50% of my trade, I lose 50% of my trades. And you can see if I make 2% for all of my wins, but I lose 1%, I am profitable. Because if you place 100 trades, you lose 50, that's minus 50. But you win 50, and every time you win 2%. Well, that's 100% plus. And have a look at this. This blows my mind. This is what we went through before. If you win 30% of your trades, which means you're losing 70. Have a look at this. Boom. If you have a 1 to 3 risk reward ratio, you are profitable, which means you can lose 7 out of 10 trades and still make money. That's your win rate, which is super important. And then we have this as well. And creds to, the people that's created these. This is Maverick Currencies that's created this. I'm not sure who created this. I think it's FTMO. So cred to them, right? But have a look at this. This is absolutely amazing to look at. So this here is the statistics of losing trades. So if we win 50% of our trades, and if you place 50 trades in a row, there's actually, have a look at this, there's actually a 29% risk that you're going to lose 7 trades in a row. It's all percentage, even though you're going to make money over time. So I need you to understand this concept, because even though you have a 50% win rate, it doesn't mean you win one, you lose one, you win one, you lose one. If you flip a coin, let's say you can get head or tails. Now, if you flip a coin 2 times, is it possible you get tails 2 times? Is it possible you get tails 5 times in a row? The answer is yes. The probability is low, but the answer is yes. It's the same in trading. So even though you have a profitable strategy, you could lose 5 in a row. What most people do is they change strategy. So as you saw in my result, I have lost 5 trades in a row. And despite that, I still made 67% last year. I'm still up 21% this year. And that's something you all can do as well. So I hope you found that interesting, of course, because for me, as you can hear, I'm very passionate about this. I think this is absolutely brilliant. And there's 2 more things I'm going to show you here before we wrap up this video. I'm going to give you a really cool challenge as well. Number 1 is this. I want to mention margin for you briefly as well, because we don't need to put too much emphasis on it. But with most accounts, they give you a leverage, which means that they will give you money to trade for. Now it works in the same way. Well, most people abuse it. So if they give you 10 to 1 leverage, you actually can buy 10 times more, which is insane if you think about it. But people think about it the wrong way. So if you buy a house, would you agree with me that you only need to put in a down payment of maybe 20%? That means you're using leverage, you're using the bank's money. But of course the house is collateral. So very important, no matter, if you write this rule down, you will be fine. So as long as you risk 1% of your own money. So no matter how much leverage you use, as long as you only risk 1% of your own money, and that's what you put into TradingView, you will be fine. The only reason we use leverage is because we want to be able to enter more opportunities. In the same way, if you invest in properties, you will be able to buy 10 houses, right? So if you only put in, if you put in 20%, let's say you buy a house for 100,000 and you have 100,000, but you take a mortgage, you put 20,000 in, and then you get money from the rent as an example. And then you have a new property. Well, you can buy another one, put 20,000 in. You can actually buy 5 properties for the same value as one. So you get more money because you're using the bank's money. It's the same in trading. You're not using it to get bigger positions and risk more. We're using it to be able to put less of our own money in so we can enter into more opportunities. But still, in trading, we only risk 1% of our account. So hopefully that makes sense. And that's just a short version of margin. And the only thing you need to remember is only risk 1% of your own money. Now, another thing that I've learned over the years that is so crucial when it comes to trading and investing is to use a trading diary. And there's some stats you do really want to know. I showed it to you briefly, but essentially what you want to do is this. You want to be documenting your trades. The reason being that if I placed, you can see here, I need to track the number of trades. So I placed 122 trades here, 70 wins, 52 losses. I know I have a win ratio of 57%. So even though I lose 4 out of 10 trades, I still made 67% in profit. And you can even see the expected value. So even though when I place my next trade, no matter if it's a win or loss, I know that I have an expected value of 0.43% per trade, which means I know that the value of each trade, no matter if it's a loss or a win, is 43% on average, because I have some losses, some wins, and the average expectancy per trade is 0.43%. So you want to know these stats, and this builds you confidence. And I'm sure just you looking at this, you can actually see that, well, this might actually be working. So even you are getting confidence by just looking at my trading, which of course is absolutely amazing. So next up then is for you to actually use this. So I'm sure we can maybe get your version. It might be in the comments. You can download this, I'm sure, or just ask us, communicate with us, maybe book a call with us so we can take you through it. But what I need you to do is this. So when you're now using and you're placing these trades that we're talking about, so if you, for example, if you're placing this trade here, right? We talked about this right now. Let's imagine you're placing this trade right here. So even though you're back testing as we went in before, so before you actually place a trade, what you want to do is you want to go up to the top right corner, press copy link. You want to put some data in here. You want to put the date of your entry. Let's say it's the 7th of August. And then you want to put the asset, Bitcoin USD, the strategy you're using, which might be Breakout, and you put then the link in. So you put the link before the trade. And then what you do is after that, you then put the link in. Let's imagine it now moves up, doink, and you make 3%. You then put the link for when the trade is done. This is going to be quicker when you back test. Put that right here. And then you put in $3,000 if you made 3%. And we have the starting amount here, which you can change. And there's 100,000. So, and you don't need to use this, but I would use something and then write notes. Now, if you have a coach, which I highly suggest you do have, what's going to happen is that, and let's say we got out of this, by the way, 8th of August. So what's going to happen is you will now be able, your coach will be able to look at these and make sure you're doing the right thing. Because when you open the pictures, you will literally see the snapshot of the trade. And that's really powerful. And you want to look at this yourself as well. Now, last but by no means least, you will also be able to then start seeing the stats, your return, the win ratio, and the more trades you place, the more your confidence will go up. So if you are looking to succeed at trading, you have to use a trading diary. I cannot tell you how important that is. Last but by no means least, there is a way that we have found to make a lot of money in trading. Have a look at this. When you learn this, even though you don't have a lot of money to start with, you can of course trade your own money, but we found this. And this, I think, we even teach people how to do this, of course, but we found something called prop trading. So I'm now doing a challenge with 200,000 with this broker. I'm using FTMO as my first one, but I've started with Funded Next now as well. So I've started a challenge. I pay a little bit of money to get access to $200,000. Here I have a live account, which is $100,000. And have a look at this. So if I go to, for example, my payouts, what you will be able to see here is, and this is not with my own money. You can see here I've got paid out on this account roughly $9,000. And this, of course, is going up every month now. And I just want to make this really clear that I have not put a dime into this account. I pay for the challenge, which I then get back. So I might have spent $1,000 or $1,500 on challenges here, and then I've made $8,900. So you can see I made so much more than I spent on this as an example. So prop trading is something that is really cool, but you need to prove that you can trade. So the rules are, you cannot lose 5% in a day or 10% in total of your whole account. And you have to make 10% in stage 1, 5% in stage 2. If you do want to try this out, there's going to be a link in the description as well, so you can sign up, and I'm sure this might be a little bit of a discount if you want to try this, but I would only try this, and you can even sign up to them and do a free challenge, so you can try and see how the platform works, how everything works. But I would highly suggest you learn how to trade first. So make sure you do all the steps that we have now discussed in this video. So my friends, we have now spent a long time together. We have spent more than 2.5 hours together, I think, a long time. And if you watched all of it, right? But I want to tell you this, you have learned everything you need to make money with trading. I know there are some things we haven't taught you, and listen, I can make a video of 10 hours, but this is what you need if you really want to be successful with your trading. And there's a few things here now, and we've really gone through everything of it, right? But there's a few things I want to mention, and then I'm going to give you a challenge. So basically, what you want to do now is this. We have now even decided on a strategy. We have been scrolling back, finding good trades. We've been demo trading and even back testing. And now I would like you to do 10 to 20 trades. And if you have a coach, ask them for feedback. You're more than happy to join us, of course, as well. And then you keep doing this, and if you have a trading diary, you will start building your results and see it grow and become better, and after that you go live. But important, do not switch strategy. Do what makes sense for you, and you can do pretty much most strategies as long as the probability of you making money is higher than you're not, and also that you have the higher probability that when you win more than you lose. Most people actually don't succeed because of the mindset. What we have been going through here is the 20%, and we have a lot of stuff regarding mindset as well. But a few things with mindset is this. Don't switch strategy. Losses are part of the game. So even though, and it's important, even though you feel that you want to win all of the trades, that's not how it is. You have to watch trading as a business. Your losses are expenses, and you just need to make sure you have more income than expenses, and then you have a thriving business. It's not like you didn't get a sale. Oh, I need to switch strategy. Maybe sometimes, but you just need to keep getting enough numbers so you can see the results over time. You need a big enough sample size. And what I would highly suggest you do is to read the book Trading in the Zone, as we discussed. That's going to give you all the mindset you need. We've done a lot of content on it. We spend a lot of time on this with our members, one-to-one and in groups, because that's the key to become really successful with your trading. So 10 to 20 trades, evaluate, use a trading diary, and you keep doing this until you're ready to go live. So I want to circle back to where we started. You guys have done a phenomenal job being here, and I want to give you a challenge. I'm not sure if you're up for the challenge, But I would like you to now do this, what we're now going through. I would love for you to do it over 100 trades, okay? Over 100 trades. So do what we now said, do it with 100 trades. Backtest 100 trades, maybe 10 a week, 5 a week, and then you will see your results grow and you will get so confident. And then try to place trades with demo. There's no risk, it's fake money, it's demo, and it's definitely gonna change the outcome of your trading, but you do need to practice a lot. And the challenge I have for you is this: stick with this for 6 months of learning. Stick with it for 7 to 18 months and you will achieve mastery if you follow the directions in this video. I am sure of it. I've been trading for pretty much 25 to 30 hours, and this here is what you need to really succeed with your trading as well. So the challenge is this, right? Do it for 18 months and you will be amazed with the results. But the challenge right now is do this for 100 trades. Keep track of your trades, write in the comments and report what results you got. And if we can support you, we are here to support you on every step of the way as well. So I really appreciate you watching this comprehensive part. We might release more, we will see, right? Let's see what the feedback is, and if there's anything else you would like us to dig deeper into, we certainly will do. But make sure you look in the description, maybe join the community, maybe book a call with us, depending on what you would like to do. We live and breathe these things, as you can see, and we've helped tens of thousands of clients succeed in their trading as well. And we would love to put you on the right path. There's a lot of scams out there. There's a lot of, not only scams that they pretty much trade for you, right? And then they scam you. So if something sounds too good to be true, it usually is. Here you actually need to do the work. And if you look at YouTube, every strategy seems the best thing since sliced bread. But it's not that easy, you know? Every strategy will win some and will lose some. It's both part of the game. And you need to learn how to control you. And you do that from mastering the mindset and getting enough runs on the board, getting enough experience. And see this as a marathon. This is not a sprint. So see this as a marathon and just do the best you can each day. Maybe backtest 2 or 3 trades each day, place 1 or 2 each day, and start documenting what you're doing here. So don't only watch this video, study the content over and over again until you make a success out of it. And like I said, we are here to support you as well. So the question I have for you now is, are you up for the challenge? I would love to hear about your results and I look forward to seeing you very soon in our community.